We talked a lot about buy the dip, buy the dip, buy the dip. But there's time to sell the rip, sell the rip, sell the rip. We are in a sell the rip market. The dynamics, the catalyst, the stocks, we just have to react to the information we're getting. And boy, are we getting a lot of information. And we're going to get a lot more information today, folks. Earnings, Netflix, the spiral south continues. You beat by a penny, but that's not good enough. UAL soaring. So, hey, consumers still doing okay. Sahak Manuelian, 835, our special guest from Wedbush Securities to talk macro. Warren, not Warren. We got to quit saying Warren. Greg, KHC, I'm out. Will that be another Delta Airlines? Tune in to PreMarket Prep. Tune in to STN after PreMarket Prep. Let's nail this market today.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, buy the dippers. Well, they were out last night, and then they got smacked around. We're down 5.5 handles, 68.24. Traded below some critical quarterly levels. Oh, as discussed by Jeff York in the STN room, he's bearish not only now, but he's bearish for the whole year. The buck turning down 14 cents at 98.30 TLT. Pounded yesterday, up 4 cents today. What's that tell you about interest rates? 89.69. Crude flat 72. Crude or gold still ripping. GLD up nearly $10, 446.70. Silver, the laggard. That must be a fun spread to trade. Down 37 cents at 85, right on the kisser. Bitcoin futures sinking again. Down $1,000 at 88,655. Dennis, it's a Wednesday. What can we say for not welcome Wednesday, wild Wednesday? What could this day turn out to be?
Well, you know what we could say? We could actually say that this charts are brought to you by TradeStation. So
Oh, yo.
get back up there.
Oh my God, I'm such
Your
a
intro.
So Michael spends all this time doing the outline. I have the outline in front of me, and I missed the first thing.
You missed the sponsor. It's the quick trade station sponsor. Tell me about
trade. Chart, analyze, customize, all in one platform, and Triple D's gonna be he's gonna be figuring it out too. He's gonna be working on that trade
we're working
station.
with these trade station charts and trying to learn how to do more. Brentster's got it. When you were away, Brentster did a pretty darn good job on the charts. He is doing some fun things with these trade station charts. So we'll continue to learn more about TradeStation on this show. Obviously, we're going to continue to learn more about the markets, though. So, I mean, really here, let's talk the markets because, wowzers, we are in a macro-driven Trump market. Like we were saying, love Trump, hate Trump, whatever your political views are, you cannot doubt that Trump is the mover and the shaker right now. He will be speaking this morning. It is scheduled for 8:30 a.m., so he could actually start speaking during pre-market prep. He will also be...
So disrespectful.
Yeah, he should be waiting till after this. Maybe he'll wait, Joel. Maybe he'll wait till 9 a.m. till we get done the show. But also, we have him speaking with Joe Kernan on the exchange on CNBC from 1 to 2 p.m. So we don't know what time, but at 1 o'clock that show starts. So somewhere during that 1 p.m. to 2 p.m. period, Donald Trump will be coming and speaking with Joe Kernan as well. So, I mean, this is the move. This is what matters to the markets right now. This is why we were down yesterday. I know Bassett was saying, oh, we were down because of the carry trade. And we cited the carry trade as well. But don't kid yourself. We're down over these tensions with, obviously, EU. We were down over the tariffs. We were down over the potential invasion of Greenland. What does he say today? He's going to go over there. I don't think he's going to change his mind. So it's about anticipatory trading. I think the market is nervous ahead. We were up overnight, but we're starting to sell off ahead of the 8:30 speech because there's no way he's changing his mind. I think he's going over there and saying, look, sell me Greenland or we're going to take it. I think he's going to say something like that. How do the markets respond to that? Do they sell straight off? I think probably. But, or does he play cool and say, oh, we want to do a deal? He's going to, either way, he's going to talk Greenland and he's going to say, we want it. But does he, talk about, the potential to do a deal and buying it? Then the markets could actually rally on that. So, I mean, it's how the tone is, what's said. I mean, obviously, when you're speaking, on the podium at 8:30, it's going to be maybe a little bit more scripted. With Joe Kernan at 1 o'clock, it's going to be completely off script. But Trump never goes on script anyways. He's going to say what he thinks. Like, how do you think this is going down?
No comment.
No comment. That's the safest no comment. Yeah. So we can see Trump. He is walking into Davos right now. The helicopter just landed, just got off the helicopter. He's walking in, and he looks ready to talk Greenland. He looks cold. Maybe he's up there. He's like, I don't.
I'll just say this. I'm not saying it because they're the second most popular market information station, but I don't think that he's going to challenge him at all. I don't think Joe Kernan is going to challenge him at all.
No, well, Joe Kernan's buddies with him.
Yeah.
So there's not going to be a big challenge there. Like, look at who's interviewing. Joe's been Republican for a long time. He's been friends with Donald Trump for a long time. So there's not going to be like big challenges here. What does he say? That this is all about, what does he say next? That is what the markets care about. So we can talk Netflix earnings. We can talk, Johnson & Johnson earnings. We can talk, there's lots of other things to talk about, with the SanDisk, Micron just going up forever. We're going to talk all those stocks. But what matters to the overall market in your portfolio is what Trump says today. That's what matters. How does he approach it? If he approaches it with, look, we want to buy this, I think the markets will applaud that. If he approaches it, give it to me or else, I think the markets sell off on that. So we can see, war stocks here have been holding up fairly well. Joel, you wanted to say something else too?
Yeah, no, I just wanted to sneak in. Is he going to say anything about Bitcoin? Because our show is sponsored by Hive Digital Technologies. Just wanted to let everyone know that. Hive, we have some great interviews coming up this month. Show's brought to you by Hive Digital Technologies, global leader in green-powered data centers for Bitcoin mining, high-performance computing, and AI. Operating with nearly 0.5 gigawatt of renewable energy, Hive is on track to capture 3% of the world's Bitcoin production by the end of 2025. Moving on to 2026, scan the QR code on screen or visit the link in the description to learn more. Also, turn in for our bi-monthly Crypto Corner features with Louis Sykes, Homie Charts. He is excellent with the market. So big shout out to Hive Digital for being a sponsor.
And Frank is awesome too. When we get Frank. Frank is a busy guy, and we try to get him as much as we can. We'd have more Frank, but he's busy. Let's talk just quickly crypto into this too. So what we saw yesterday was a lot of selling across the board. Not in SanDisk and Micron because those stocks are just resilient, but in everything else. And crypto did not, have a good day either. We knew Bitcoin, Ethereum, both risk assets, both down substantially with the market overall. They're down again here overnight. I mean, Ethereum and Bitcoin have the identical chart here now, so you don't even have to do them separate. I don't know when they separate again, but they've been identical here. Do IBIT. I mean, the level of all levels we've talked about on IBIT is 46.68. I don't know where that coincides with the futures. What is it, about 85,000 maybe? Is that about where it coincides?
Yeah, exactly.
So I trade the IBIT. The volume and liquidity is awesome on this thing. It's literally always a penny spread. It seems like even in the middle of the evening, it can be a penny spread. 1.9 million shares are traded. So it's so liquid, Joel. This stuff is so liquid. So
that's good, man. Even on
because Bitcoin and crypto's trading all night, so now you've got a liquid market in all the time. So the ARBs just keep it in line. The high frequency traders keep it in line. But I mean, we got major support here. IBIT are coming into at 49 to 50. I think we just dropped from 55, which is basically a 10% down move here in a couple of days. I got to think we bounce here again in this 48 to 50 area on IBIT. So there is some support in here. What are your thoughts when you look at this chart? Or is it just down here too long?
It's been a trading, yeah. Oh yeah, yeah. Kind of like like Microsoft, like hanging out for too long.
Yeah, and then they
At the
eventually break down.
you don't want to hang out too long. At under the 50 and under the 200. So that's what I was gonna say. You can't be whatever your thoughts are with transactional, whatever, man. You got to respect the charts. He had that nice false breakout over 95. Maybe we'll get a false breakout here or breakdown here, but in a trading range for sure. In a trading range with Bitcoin and IBIT.
And then let's talk software. Jay bringing it up in the chat here. CRM just goes down every day. ServiceNow goes down every day. Workday goes down every day. Microsoft is starting to look like it wants to start going down every day. I mean, software is just in shambles. Benioff on CNBC yesterday talking up his stock, saying how they're the best AI company out there, just pitching like pumping like you never believed Benioff could pump. And the stock just went down in his face, like closing at the lows. This is just ugly. I mean, bring up the CRM here. You got to link your charts again, I think, because you got them unlinked, Joel. But CRM straight down in 2026, straight down another, what is that? Another 20%.
That's crazy move.
These are big. Look at that bar. Like that's boom. Like 7 days of just pain. But look at ServiceNow. I mean, this was, we keep talking about CRM and it's been in the gutter for a while. But ServiceNow was a darling until 2025. And then even in the middle of 2025 was still not far from all-time highs. Something else is happening here, folks, and it's AI. It's telling you that these software companies that are selling the stuff, that AI is going to maybe
eat their
attack
lunch.
some of their businesses. I mean, this is just, and it also could be that, this is just, a great buying opportunity. These things are oversold. I'm too scared to touch any of these stocks. It kind of makes sense to me here, but this is like ServiceNow, which is a great run company, will not stop going down. I mean, this is down in just the last, week and a half, down 25 points on $150 stock. But I mean, when you look longer term here, I mean, ServiceNow is now back to where the stock was trading in 2021. CRM is now back to where this stock was trading in 2021. Workday is now back to where this stock was trading in like 2019. Years you've had this huge bull market in tech stocks, and all these software names cannot catch a bid whatsoever, and they're giving back years of gains. This is a problem. Like, definitely AI is going to have winners and losers. We had Jamie Dimon talking this morning again, which he's always talking, but he said at JP Morgan, there will be less jobs in 5 years at JP Morgan than there is today. That's what Jamie Dimon just said. He said there's going to be less jobs because of AI. That's Jamie Dimon talking. Like, Jamie Dimon always talks bearish on everything. It's funny. He runs the best bank, but he's ultra conservative. But I mean, he's talking about AI taking away jobs. He said at JP Morgan, there will be less jobs. So is AI going to take away jobs at these software companies? Is AI going to actually impact the businesses of some of these software companies? Well, that's what the stock market is telling us.
I saw one of your when I was out last week. I saw one of your headlines for the show, and you said it was not a sassy market or something.
Yeah.
What day
software as a service. So these are all software as a service stocks.
But they're just gonna have AI do it. They're just gonna have AI. Oh, you know what? I know I went on my rant about the free press in getting my newspaper delivered. Well, it did get delivered on Sunday. The AI or whatever they took out of it. But who did I call yesterday? And man, I know it was. I had to make an appointment for something. I can't remember what it was, and it was a total. I mean, this person sounded like a person.
But you think it was AI? You think it wasn't?
I know it was AI.
It wasn't a person.
It was not a person.
Eventually, you won't be able to tell the difference. Are you real? Yeah, you won't. Like right now, you obviously can tell the difference on it.
No, they're getting so.
But they're getting better.
I gotta look.
Are you real? Is this a person? Are you real? And then it's saying something that doesn't exactly pertain to the conversation.
No, they'll say they're real. They will. They know.
They'll lie to you and say, "Yeah, I'm a real person. I have real feelings."
Yes.
No.
Who the heck did I call? I got to figure this out. Who I called somebody yesterday. To order something or get something delivered. I can't remember, and it was. I'm telling you,
Maybe eventually, Joel, there's a good side. Maybe we can just sleep in and our AI bots will do the show. That's what they're talking about in the chat. Maybe, Joel isn't real right now. Maybe this is AI Joel. This is fake Joel. We'll just ask, create a pre-market prep show for us and talk about all these things. And it'll do it. And it'll do it all perfectly where, we don't go too left or too right with the politics.
Oh,
we stay in the middle. And we don't tick anyone off. Everybody is just happy, and that's where we're heading.
Like you wouldn't kick any of these people out of the chat that we should kick out.
We love everyone. Never. Yeah, that's awesome. We love our chat.
It's Gronk. I don't know what the hell it's bothering me now. It's going to bother me all day. What did I do? What did I order or cancel an order or something?
No, it's going to bother you all day long. Okay, bad tangent.
Where's Brent?
Bring us back. Greg Abel is busy. Greg Abel. So it's no longer Warren Buffett, because last night on STN, I was like, Buffett sold. Buffett sold KHC. Buffett sold. I'm yelling it out. KHC last night. And this was when the stock was like 23.20, because we saw the filing and I'm like, oh, somebody filed to sell KHC.
You nailed it.
We said, well, could it be Buffett, you said? And I was like, well, I think he's out already. And it's like, nope. I'm like, I just found it. It's Buffett. It's Buffett. Well, I got to stop myself because it's not Buffett. It's Greg Abel now. Berkshire is officially Greg Abel's company here now. So Greg Abel making a call here, dumping the rest of his KHC, filing to sell, which is interesting because Buffett usually just kind of sells. Greg Abel actually did a filing to sell it. So this is get rid of this, like one shot, 345 million shares. Let's go. Get out of here. So if you're looking at KHC this morning, which has been one of the worst stocks to invest in over the last decade, it's down now 5.5%, and that is because Greg Abel says no to Warren Buffett's Kraft Heinz.
Well, first of all, I mean, can you imagine if they would have given us that order a couple of weeks ago? We could have worked it. We could have worked that. Like if that was the only order, the only thing I had to do on the desk to work that order, and they told me a couple months, a week ago, 2 weeks ago, you could have worked your way out of it. So I'm a little disappointed. The only thing, there's two things that pop into my mind. One is this, and this isn't Warren selling. This is Greg, but is this a Delta Airlines moment? Okay.
Ooh.
Is this
the bottom in the airlines?
20? He started buying in 2016. Okay.
Where did he sell? Right at the bottom?
Yep. And he sold in the second and third quarter of 2020. Right in here.
I didn't lose too much. He didn't sell. He didn't sell in the COVID crisis, did he?
But he said because of COVID, he was worried about that.
He was worried about it.
Yep. Now, are these, is it a different person making the decision? Is it a different company? I don't know. But I think it would be very important that I mean, I'd buy the whole stake at 20. I don't think I'm gonna call my broker and see if I can get the whole thing. But I would buy.
You want to buy what Warren Buffett or what Greg Abel is selling?
At 20.
I'm not touching Kraft Heinz. The dividend's 7%. That's attractive. But, you've had staples hold up fairly well. Like Kraft Heinz has had problems, man. You want a problem child stock? It's been Kraft Heinz. $60 back in 2018. It's $23. Yes, you've been paid some dividends over that time, but I'm pretty sure you've lost the majority of those dividends through the stock depreciation. I mean, now throwing in the towel here, the stock is near 2020 COVID lows. So I do see what you're looking at. You're looking at that COVID low and saying, well, that's got to hold. That's That's got to. Well, nothing has to hold. But I tell you, this stock has been an ugly place to be, and Buffett's been in the pain trade for this for a long time. The question now, though, does Greg Abel start selling off other Berkshire Hathaway holdings? Because you can see there's money to be made. If you knew he was going to sell it, it's down 5.7% today. So anticipatory traders could be looking here and saying, does he continue to lighten up other names? Does Greg Abel want to make, I'm buying these companies. This is my company now. I'm buying these stocks. He may change. Apple he owns 22% of still, even though Warren sold a lot of his Apple. American Express, 18% of that company he owns. Bank of America he owns 10%. Coke, 9%. Chevron, Oxy, I mean, these are significant holdings here.
Let's go to the Oxy.
I mean,
Come on. He's got to be underwater in this.
Oh, he's
And
underwater. They chose wrong with Oxy. Go to ExxonMobil. New all-time highs yesterday. ExxonMobil.
they're not cooperating.
Oxy, not even a lick close. He was loading her up at 58. Remember, we had the 58 floor in that thing for the longest time. And then he's like, I don't think I can buy anymore. I don't know how much of Oxy he owns, but I think he owns like 30% of the company. He owns a pile of it, like a lot. So he's been wrong. This has been a terrible oil stock to be in. Definitely the best one's been ExxonMobil. And maybe that's what you got to do is always stick with best of breed, or at least second best of breed, which is Chevron. I think that's what we should learn from this, taking talking points. When you're looking at sectors, and there's like a dozen companies in the sector, pick the top one or the top two. Don't start getting cute and get into the ones, that obviously are not even in the top five, because then you get stuck with an Oxy and it's pretty bad. I mean, NVIDIA, AMD, the top, and obviously there's lots of other chips, there's lots of other things to think about. When you start reaching, longer term, you should stick with maybe the biggest winners there. But this, Oxy purchase has been bad. Do you think Greg could lighten it up? Eat the loss and move on? Because if he started selling Oxy, here's a cool little factoid, without doing an offering, because we found out the KHC
He has to disclose it.
He did the offering for it. But if he just started selling it in the open market, he's over 10%. We get a filing within 3 days. So we would know. The first sale that you see of Oxy would be like, people would be like, oh crap, sell, Mortimer, because there's going to be a lot more that follow. So I don't think he's going to do that, but we don't know. Greg's running the company now. Could be completely different.
Yeah. I just, and also we're going back, and I don't want to bring back a bad memory for you, Dennis, because I know you had the Heinz, the HNZ for a long time, and you sold it.
Taken over by Warren.
And then it got taken over.
I had the original Heinz, and it was HNZ, and I had this in my long-term portfolio for a decade, 10 years. And I'm like, you know what? It's come up a bit, and it's kind of just been a laggard. I'm just going to dump this. And literally a week later, Warren Buffett bought and took the company private. And I'm like, are you kidding me? Obviously, it's come back out, and KHC is out there now. But he took it private, the original Heinz. And I was like, it was a huge premium. I was like, I missed out on like 20 points. And I was like, I had it for a decade. I mean, this is the worst sale of all time. That might have been my worst sale of all time. Had it for 10 years and then sold a week before it got taken over. That's crazy crap. That's bad luck.
I just a real quick. I mean, do you think this is like Ozempic related? I mean, everyone loves Heinz ketchup. I mean, you could do a taste test with Heinz ketchup and every other ketchup, and I could pick it out. There's no doubt. That other ketchup, that Del Monte, it's kind of runny. But macaroni and cheese, Oscar Mayer meats, Lunchables, Philadelphia cream cheese, Jell-O. When's the last time you had Velveeta? I love Grey Poupon, even though there's some better mustard out there.
I don't think so. I think it's just been an underperformer for so long, and he's just like cutting out some of the losers. Like Warren isn't a big cut the loser type of guy. He's kind of like gets vindicated and he just holds forever. He doesn't really sell, and then eventually maybe lightens up when Apple goes up like 300, 400, 500%. But he's kind of like not been one of those cut my losses type of guy. Maybe Greg Abel's going to run it differently. Maybe he's like this. Like this one didn't work. It hasn't worked for us for a very long time. Let's just get rid of it and put the money into something more useful. I think that's the way he's approaching it. So I don't know if it's on like he thinks the company fundamentals are deteriorating as much as he just thinks that there's just better places to put your money. That's what I think he's thinking.
Okay. Do we want to go to a little after hours news and a stock that was in the spotlight a couple weeks ago with CES, Serve Robotics?
Yeah, so Serve Robotics, and we were breaking this headline too in the room without the Brenster, who will be back tomorrow. He's sick still. Serve Robotics to acquire Diligent Robotics, expanding physical AI platform beyond the sidewalk. Diligent's Moxie robot, among the largest autonomous robot deployments in hospitals nationwide, over 1.25 million deliveries completed by nearly 100 robots in 25 hospital facilities. The annual sales at each hospital expected to range between $200,000 and $400,000. So bottom line is you got Serve Robotics delivering stuff on the sidewalk. They're going to move, with this move, they're going to move into the hospitals. That sounds cool. That sounds like opportunity there, Joel. I mean, Serve Robotics, we had a great trade on this ahead of CES 2 weeks ago. Obviously, I bought the thing. I think around 10.50, anticipating. I knew they were presenting at CES. They were on the schedule, and then obviously, I had some news came out during CES.
I
Stocks were
predicted
way
the
up.
robot would come on stage.
They were on stage off the bat to serve robotics. So it was a good week it was a really good time for serve robotics. I've sold it because the CES trade is over, but I'm not opposed to getting back into this if they start showing me, reasons to get back in. I firmly believe when we get past the geopolitical situation, because right now it's all about Trump, but that this too shall pass. I firmly still believe that 2026 will be the year of robotics. So you're starting to think of good robotics companies. I mean, this is not a bad move for Serve Robotics. You can't look at it on, valuation because the company doesn't make money. You got to just look at it on like story. You're like really, the robotics story, I think continues to build in 2026. This is a story. And you know what? This is actually a pretty cool headline here to start to expand into hospitals. So I kind of like it.
I kind of like the setup too, because this is the CES run up 10 to 16, right? You come back and you had a little gap day. That's the day that it went on the stage. The robot, I don't know what his name is, and I don't want to say he or she. But if you were just being cautious and you waited for a gap fill here, you got it. 1350 versus 1335. That's textbook right there. Gap fill, little pullback. What I think you want to see now is you want to see like willing buyers here, 1350, 1360, 1370, build a base. You don't want it to go right back up too quickly. So that's take a look at it. I'll repeat it again. I saw one on the street in Los Olos, and it was waiting. I tried to lift it up to see what was in there, but I think you got to have a code or something. But it went up to a light to cross the street, and it had like a little flasher thing, and it said, could you hit the cross the street thing? But in hospitals, take this down to room 212, or go get the tray out of, they're finished with their food. I mean, there's a lot. And we all know hospitals, man, they need to cut costs. So very interesting.
I think so. I think I like the story here. Now, again, this is a market that could get harpooned by Trump in 20 minutes. So it's hard to take positions here right now ahead of key critical speeches here. And this is going to be one of the speeches that everybody is glued to the TV when he takes the podium here in the next 15 to 20 minutes. So I like the story, but I don't like the macro picture right now. I'm very worried about the macro picture. We named the show STR, which is sell the rip. I think we're still in that market where rips get sold because of so much geopolitical uncertainty. Let's go to a few of our earnings trades, which we have skipped. We did not talk Netflix here yet. The expected move was $6 here, Joel. And lo and behold, the stock is down $6. Now, I thought it could have a relief pop. I thought that, the stock is really, been in the gutter. Everybody kind of hates it. I thought it could pop, but I also said if it pops, price sellers come in very quickly. It didn't even get a pop. There was no pop at all. The stock obviously trading down substantially here in the pre-market, now getting down to the expected move, and it's been a steady leak. So what are the problems here? Well, one, the guidance was okay, but not great. The earnings were fine, 56 versus 55, 12.05 billion versus 11.96 billion. But Netflix Q1 gap, they see 76 cents. Analyst was up 81 cents. Sales, they see in there in the range, but they're a little bit light for next quarter. Crossing 325 million paid memberships. There's some good metrics in here, but the growth targets here just don't seem to be there.
I mean, I think people are just looking at the historical history of these big media deals, and just not one has ever turned out. I mean, you just go back. I mean, maybe Disney buying Cap Cities ABC in the 90s or something, but I mean, AOL, Time Warner. I mean,
I think they're paying up way too much for Warner Brothers Discovery. I know, there's analysts out there that are saying, oh, the synergies and oh, there's so many things they can do with Warner Brothers Discovery here. But I think you're paying up for, these networks here in a world where AI is going to start producing content. I think AI is actually going to start eating some lunch of some of these content producers. Hopefully not us, but I think that it's going to. I think you're going to get AI shows, and I think they're going to be good. I think you're going to get some AI movies, and I actually think they're going to be good. They're going to take time to get there, but they're going to be good. So, I mean, going and paying a ridiculous amount for WBD at this point in time seems like an overpay to me. I don't like it at all.
We were looking at this last night in the STN room, and just it's where buyers willing to step up. And last night, before we went off the air at 5, it looked like 83. It looks like they were sniffing at 83, and I was thinking, man, last night I checked it 8 o'clock print. I'm like, man, it could get thin overnight if those buyers aren't there at 83. Well, maybe 82. No, not 82, not 81, maybe 90 or 80. That's where they're stepping up. I'll just go to your weeklies, and you can see you are just in a world of hurt. If you want to go to your weeklies, your next weekly low, wow, we are below that. $80. I'll make a stand here. 79.56. That's only a buck away. That was your low in mid-November. So 80 psychological level beyond the expected move, but when things get beyond the expected move, those option guys are scrambling. Well,
we'll see Dennis, if it can hold at the expected move.
Exactly. Good way to wrap it up. I see our distinguished guest here in the background, and he's been patiently waiting. So let's do it. Coming on to pre-market prep, we haven't talked to him in a while. Sahak Manuelian, Managing Director, Global Equity, Healthcare, Sales, and Trading at Wedbush, getting up super early this morning. Sahak, how you doing?
I'm well, thank you, Joel. Thanks for having me on. Good to see you guys again.
Oh, man, we got so many different balls to juggle here, right? But I'm going to go first with the broad one. I mean, in your job, in your profession, talking to institutions, talking to about investors, what do you say when they call you up and say, man, I am very worried about this geopolitical situation?
Yeah, well, there's a lot of moving pieces like you guys have been talking about this morning. A lot of reason for concern and angst out there. What I would say is, look what happened in 2025. We all remember April 2nd. We all remember the liberation lows, etc. So certainly this president and this administration like to make big waves, big splashes. And so I think it's most prudent for investors to really try to slow things down, not to react too quickly. The knee-jerk reactions can certainly get investors in trouble in the short term. See how things kind of play themselves out. But overall, I think we've got really a pretty strong stock market. We've got a pretty strong economy thus far. We seem to be on some pretty good footing here. And, a lot of the noise, if you will, is certainly important and should be paid attention to. But a lot of the investment decisions should be made, with respect to portfolios, positioning, et cetera, and various dynamics of that, and not so much around short-term news items that come across our Bloomberg terminals.
Okay, and we know there's going to be a lot coming across here. So let's look under the hood. Let's look at the VIX, right? Let's look at the widening high yield spreads, right? Are we in early stages here of a broader risk regime?
That's an excellent question. So the VIX, we saw that ramp up a little bit yesterday. We're hovering right around this 20 level. We've seen high yield credit spreads again widen yesterday. They've been very tight for a very long time, which has been a great tailwind for equities. And then to your question, is this coming towards the end or the latter stages within the equities rally? I don't think so, not quite yet, although I think it's very normal for us to continue to see retracements. Now, yesterday, stocks were down some 2% or so. There's a lot of global stuff that went on, especially in Asia with Japan and some of the bond market activity and global yields rally that we saw that certainly spills over to our U.S. markets. But again, Joel, to not get too far off here, I think that the market's still in a pretty good position here, albeit the VIX up a little bit, starting to move higher. So we're paying attention to that. High yield credit spreads widening a little bit. That could be a headwind for stocks. I don't think it's a problem yet, or doesn't seem to be yet. But again, we're monitoring these things very closely. And I think really more broadly, I think 2026, the punchline for 2026, I think, will be a story about rotation under the surface and looking at some of the laggards from 2025 and how maybe those will start to generate more inflows where investors seek alpha, in other sectors other than technology and AI.
You nailed it there. We've talk about the rotation. I mean, and you could look at some of these things, and you look at the mega caps, you're like, huh, oh my gosh, the world's coming to the end. But then you look at the small cap outperformance, hitting a new all-time high on Friday here. This is a nice trend. This is something that we've been waiting for a long time. Can this hold up in the face of yields, or, some kind of surprise coming out of the Fed?
So we believe this, small cap outperformance trade certainly has legs, and the year to date performance has been pretty impressive. The Russell 2000 outpacing the S&P by just over 700 basis points year to date. And to this end, a very strong macro backdrop, an accommodative Fed, rotational forces, all helping. And then, the contained or low yields have also been a factor. But to what you just said, and what's been going on in the marketplace over the last 24 to 36 hours, yields are starting to move up. Is that going to spook small cap investors? I don't know. We'll see how this plays itself out. It's not going to be a 1 or 2 day phenomenon. But having said that, I think that small caps are in a very good position here, given the multi-year lag and underperformance versus some of the large cap peers, and given that valuations within small caps still look pretty compelling, whereas these large caps are, I don't know if frothy is the right word, but certainly seem to be fairly valued. Maybe is an appropriate way to state that. So I think small caps and mid caps will be the leaders this year over large caps.
Sahak, speaking of frothy, and Kramer had an entire segment last night on Mad Money about selling the froth. He did the entire show. I've never seen him do an entire show. He had an entire show, 1 hour dedicated to selling the froth. And we have seen some incredible moves in a short period of time in 2026. And, we don't have to get stock specific, but I just want to give some examples here. Like Rocket Labs, straight up. ASTS is up something like 60% in 3 weeks. SanDisk and Micron go up every day. Like memory stocks, WDC, same thing. Obviously, STX involved in that moves as well. But I mean, these moves in SanDisk and Micron, like SanDisk is up from $230 at the start of the year. This is literally 3 weeks ago, to $453. That's up 85% in 3 weeks. I mean, are these moves sustainable? Is memory this short? Like, what are your thoughts here? With, obviously Mag 7 has lagged tremendously, but the money's not coming out of this market. It's just going to different names. Like, is this memory short is this severe that Micron and SanDisk are just going to go up forever?
Yeah, Dennis, these moves in some of these memory names are incredible. There is a real shortage of memory, and I think that these stocks, as incredible as some of these moves have been, I think that in the near term, anyways, any retracement in these will probably prove to be a buying opportunity. Having said that, some of the Mag 7 stocks and some of these AI trades that have also had these huge moves over the last 6 to 12 months, I think some of these don't look quite as compelling as other areas of the market. And I think that some of these may continue to trail or certainly lag the tape as we move forward here. But specifically memory names like Micron specifically, I think that given the global shortage of memory, these stocks should continue to outperform through 2026. And I think, again, any short-term weakness that we have, especially any short-term weakness on macro headlines, will probably prove to be a buying opportunity for these names.
Okay, speaking of this, because we have seen a huge divergence here happening this year, and the software names continue to get hammered. So as much as memory names and some of these semis have been strong, the software names just cannot catch a bid. They seemingly are doing the exact opposite of Micron SanDisk. They go down every day. Salesforce.com, CRM, straight down all year. Workday cannot catch a green candle, just continues to go down every day. ServiceNow is another one here. NOW falling from 150 at the start of the year to 125 in just a 10 trading days here. Microsoft starting to look pretty ugly too and starting to leak here too. What are your thoughts on software?
I had included a relative strength chart, just looking at the semis relative to the software names, and again, it's incredible the divergence between these two subsectors within tech. I think software is in a very bad spot, tough place to be right now. You can look at Progress Software just came out with earnings, and the earnings were decent, were good. I think the stock's maybe up 4 or 5%, but again, it's gotten crushed so bad. I'm not surprised it's trading higher. I think that within this environment, a lot of these software names will continue to lag. I think that any kind of short-term or maybe near-term type strength in these will be probably sold off. And I think that there's just other places to go. I don't feel like you have to be invested in these software names just because they're getting cheaper and only getting cheaper. And I just feel like there's better places to be within the S&P 500 than software right now. And I think that this relative underperformance versus the semis, I think this probably continues, albeit maybe we see a little bit of tightening of that spread between the two, but I just don't find the software complex all that attractive yet.
I mean, how many times have we seen this scenario? We talk about the small caps, the mid caps coming back, growth is in, interest rates are going down, get rid of your mega cap tech, and then turns around and goes the other way. We got some ugly looking charts here in Microsoft, Apple breaking down, Amazon, Google, holding up relatively well. The Meta chart looks absolutely horrible here. Tesla looks like it has a date with 400. I mean, talk about the mega cap. I mean, is it time? Is this once again just another great fake out? We're going right back to what got us here.
I think that these moves here, I think there's a lot of exhaustion within the market. I think these mega cap names have been such great outperformers over the last really 3 calendar years. And I think that we may see a little bit of fatigue here. And I think that these stocks may continue to be a source of funds for other areas of the S&P 500. Again, when I look at the Russell 2000 index and I look at that chart, if you take a look at the past 6 months, this has been quite the move, and we're finally breaking out. And to your first point, Joel, you said, time and time again, we would move up and then these things would halt and people would try to get excited about small caps, and it seemingly would only get punched in the nose every time after maybe a 2 or 3 week period. This move that we've seen over the past 6 months, I think is very real, and I think will prove to be sustainable. And I think, again, there will be some alpha generated from investors looking to come out of some of these mega cap names that are fairly valued. I'm not saying overvalued, but certainly fairly valued at this point. And it's just hard to keep with the same pace of returns or ROI that we've seen over the past 3 years to continue. So either we need to see some of these come in a little bit more, which that can certainly happen, or if not, if they still hang in there, that's fine too. I don't think tech is necessarily going to get crushed by any means. I just feel like there's better places to be within the S&P 500, and 2026 may not end up being just a tech story.
All right, you've been around for a while. You've seen bubbles, right? And don't know how far you want to go back, but the great tech bubble in 99, 2000, the financial crisis. We've seen ups and downs in the markets, but how about AI? Is it just it got ahead of itself? Now it's pulling back. AI is a place to be, just like it was in 99, 2000. There's going to be some eventual winners and losers. Talk to us about AI.
Yeah, I've been thinking about that a lot as of late, just given the fact that we've had three really blockbuster years here, double-digit returns, and then within the double-digit returns, there's been so much talk about breadth, the narrowing of breadth, et cetera. And then so when I think about or try to juxtapose what's going on today, maybe to what was happening in the mid and late 90s, we from 95 to 2000, we had some big returns over that 5-year period. We're 3 years in now, really. If you consider like October 2022, maybe the low point or the trough of this most recent cycle. So as much as we've gone up, and as much as these AI names or these tech names, these Mag 7 names or the mega cap tech names have gone up, look, I don't think it's necessarily over. I just feel like here in 2026, some of these may not have the velocity to the upside that we've seen over the last 3 years, and that's why I think there'll be other places within the S&P 500 to invest. But having said that, I think this bull market is not in the latter stages yet, nor do I think AI is in the latter stages. I think we might see some kind of near-term retracement from some of the moves that have happened, but I think there's still plenty of tailwinds behind what's going on here, and I don't think we're near a top of a I don't think we're near any kind of a bubble bursting anytime soon. I don't think we see something like that happen in 26 anyways.
Let's finish up with the Fed. I mean, not much talk here about interest rates or the Fed, the Fed for the year. We know there's a little tussle going on. That's just swept under the rug, like Powell going to jail for now, affecting a lot of the geopolitical. Before we let you go, give us your outlook for interest rates 2026.
So, yeah, Fed Jay Powell, I guess, took a little bit of a backseat, which he probably doesn't mind right now with some of the stuff that's going on with. It seems like this week it's been all Greenland and Japan bond market. But anyways, so look, we're going to get a new Fed chairman soon, and when that happens, I think the person that does come in will probably be, again, accommodative. I think we've got 2 to 3 more cuts this year. I think it'll be tilted to the back end of the year, so maybe June and on, or July and on. But I think we'll still get another 2 or 3 cuts. The economy's on pretty good footing. I think inflation figures look pretty decent from what we've seen. So long as things don't change too much in the upcoming months in terms of inflation and the job market, et cetera, I think the Fed will be in position to continue with the accommodations and reduce rates maybe another 50 to 75 basis points by the end of 2026. And again, that should again be another tailwind for some of the small caps that we like so much.
Sahak Manuelian, Managing Director, Global Equity Healthcare Sales and Trading over at Wedbush Securities, getting up early this morning to join us on pre-market prep. Great information. Thank you very much. We'll be dialing you up again next month.
Thank you, gents.
All right. Okay, Dennis. So I see you had the radar on. So what did he have to say?
Yeah, so we're obviously got Trump just started during Sahak's interview here. We're watching the background. Michael is giving us some nice notes from this as well. It's a great job by Sahak. The economy is booming. So, obviously coming on and talking about, what they're doing right in America and what they're doing wrong everywhere else pretty much is what how this is going so far. Europe is not heading in the right direction. He says bringing phenomenal news from America, talking about, strong economic numbers and the closed border in the U.S., basically saying this is the way. So far, talking more about, saying how Europe's focused on green energy, which is the wrong path. But the big quote here is, you go over to Europe, you speak in front of them all and say, you suck. Basically, this is what he's saying. We're awesome and you suck, if I'm summing it up so far. Now, he's going to speak for a while, so we're going to see where this goes. There's going to be some market-moving comments in here. Nothing has been said about Greenland yet, but, when it gets to that, and it will get to that, that's going to be your market-moving, impact here. If he talks again, it's laying out scenario analysis about, we're going to, we want to make a deal for Greenland, we want to purchase it. That's good. If he says we're taking Greenland, whether you like it or not, market's going to tank on that comment.
If
So
if
it
the
all depends
economy
on
is
how it's
really
set.
booming, why do we need to lower interest rates?
No, he just wants to boom more because he wants 25% GDP. So, I mean, the economy is fine, but again, we know, there's been, a separation here. There's a lot of people still struggling in this. So you wonder who's doing well too. But, we're not going to sit here and focus on the economy here. We're just going to focus on what he's saying. Because what he says, what comes out of his mouth, will move markets. He says green energy focus and mass migration has hurt Europe. So, is this moving any of our, green energy stocks? First Solar is not really moving here. This is nothing new. There's been nothing new said here as of yet. But let's see when he gets to the Greenland situation, and he will. That's going to be the market moving commentary. So we'll keep it on. Michael's going to keep watching in the background for us. Thank you so much, Michael. But let's go back. Like, we had a bunch of other companies report here, but in a second here, we're going to go to a rating segment as well. But we had Johnson & Johnson report, and I want to cover this one because this is a huge move for J&J. J&J is trading down $6 here right now.
Oh.
And J&J, that's a big move for Johnson & Johnson. I'm not sure what the expected move is, but I'm sure it's probably there. Looking at the results. Do you have them in front of you, Joel? J&J numbers?
Yeah, it was right up here. Michael was very nice to put it in here for us. J&J earnings, QP.
Grabbing them right now.
Q4, 246 versus 244. Sales, 24.56 versus 24.159. Doesn't look too bad to me. What does it the streak like?
They expect 2026 sales to hit $100 billion. This all looks pretty good. Probably a case of bar too high because we have run on Johnson & Johnson. It's been a pretty incredible move for J&J from 175 to 218. I mean, they've obviously forgotten all about the asbestos stuff. That's in the back burner. They're not even thinking about that now. I think it's still there, but they're handling it in a total different way where they're trying to settle these cases separately. I don't know how that's going to work out in the long run, but in the short run here, it's worked out very well for J&J shareholders because that was what was the hangover on the stock was. And it's been moving up, since the summertime. So call it defensive, call it what you want, but Johnson & Johnson's been on an incredible run and the bar was simply too high.
You know what? I know they're different stocks and I know they're different sectors. I just wouldn't want to get 3M'd in this one.
I thought about it too. So
Yeah.
3M obviously had, a bad open and then tanked further throughout the day. So it's not necessarily that they're just going to come in and buy the dip, but they do like this stock. It was a stock that was at an all-time high just yesterday or 2 days ago. So I think you got good support, 205 to 210. So I do think that they will buy the dip. I don't think you're going to get 3M'd here where Johnson & Johnson's down like $15 a day. I just don't think it's kind of stock that it's going to fall like that. I think in a defensive market too, where we're playing a little bit of defense, a sell the rip market, this is actually a stock that I'd probably be looking to buy the dip on. So J&J. Rate the rating segment. So let's go. Michael, you want to run that?
Okay. All right. We are now onto our the ratings segment, brought to you by The Fly, and we'll get into a couple ratings here. Dennis, what's top of mind?
Yeah, so I think Oklo is probably the big one here this morning because Oklo has been kind of in the gutter here really since the summer here. We topped out October, I guess, not the summer. October, $193, and the stock just cannot find its way. It's been going down to 70. We know valuation is an issue because you can't value something that has barely any sales. It's all on story here. So stock had a good run from the leader to laggard trade, laggards to leaders, because it was a laggard for the back half of 2025. And it had a good run early 2026 when we ran up from 75 to 115. We'll bring your charts back up here so we can talk about it here.
Okay.
Recently, we've sold off with the overall market, but here is a contrarian call coming out of Bank of America Securities, and let's just read about it a little bit. So we've got them upgrading it to buy from neutral after the nuclear technology company signed a firm binding agreement with Meta Platforms to develop a phased 1.2 gigawatt advanced nuclear campus. B of A raised their price target up to 127 from 111. They're talking about the whole Meta deal in here. I'm just trying to sum it up quickly. Long-term model to reflect the Meta deal conservatively, assuming 4 phases of development, treating only around 30%. Bottom line here, I just flew through it here, is they're changing their 2036 revenue. So here's the funny thing is, because these companies, or a lot of these companies, are pre-revenue almost, it's a whole story. They're projecting all the way out to 2036 and raising their 2036 revenue guidance to $5.9 billion. That's 10 years out. We got to go 10 years out to try to give you some fundies on this. So Oklo, if we're just looking, at their fundies right now, their sales are, well, they don't have any sales. It's zero. Revenue is zero. So this is all pre-revenue, this company. So the company right now is worth $14 billion and they have no sales. There's going to be more offerings. I got to get there. We're projecting up to 2036 to get there. It's incredible to think you're going to wait 10 years to get serious revenue. Wow. What a market we're in.
Dennis loves one number. He's the one number guy.
I am.
97. Double top. Last 2 sessions. Haven't hit it yet. Boom. Multiple stars here. 97. Keep an eye on it. Next
one will go to ARM Holdings, and this one is also a contrarian call. And I like contrarian calls, whether they're going to be right or not. They're the toughest calls, but we have 2 of them this morning. Susquehanna upgrading ARM to positive, which is a buy at there. They're giving a price target of $150. This stock has been murdered. $180 in October. It is now trying to cling on to 107. I mean, valuation doesn't matter until it does. And ARM Holdings, this is the problem. It's the stock has just been trading at nosebleed valuations. When it was $180, it's trading 100 times earnings. Well, it's trading more than that because it's still trading 137 times earnings right now. But the cool thing is the forward P is down to 47. It's not a value stock yet, but if you cut it in half one more time, it would be a value stock. Do I think it's getting to $50? No. So I think buyers, this 100 kind of makes sense. But we've got a bold call here coming from Christopher Rowland at Susquehanna saying the stock's going to 150. What do you think?
I think that you had the death cross here. Boom, right here. You had the death cross. So wait for a golden cross, right? There's your death cross.
Sometimes you got to wait to get momentum in your favor. And
exactly.
Don't be a hero. Hero trades often are the toughest trades. I love being a hero. I like being, saying, the stock's going to turn around and calling the turns.
Dennis loves to do that so much that our segment on STN at the end of the day is to find the worst stocks in the worst charts that have had the worst day and the worst catalyst.
I literally do this trade.
And I try and talk them out of every single trade.
And they work. They work more often than they don't. We call it the dead cat bounce trade, and we do it in the Stock Trader Network trading room every single day. And I put on 2 to 3, usually every day, dead cat bouncers for after hours. And what you see is like a stock like AVAV got crushed yesterday. So you often see, a little relief pop afterwards. Why does this occur? Why do you often see a stock that falls 17% get a little relief pop? You know why I think it is? Because intraday trading is primarily driven by the institutional investor. After hours trading is primarily driven by the retail investor. What is the core, the number one retail strategy on the planet? You know it. Chat knows it. The number one retail strategy on the planet is buy the dip. And when you have markets, the institutional trader, because, there is institutional traders that trade after hours, but there's not that many. They're done for the day, 4 o'clock, going home to their families, not worrying about running their hedge fund and all their stock positions after hours. And it's too damn illiquid for them, some of these companies, to be trading them after hours. So at 4 o'clock, they're done. They hand the baton over to the retail trader. The retail trader says, holy crap, AVAV's down 15% today. That's bound to bounce. I want to jump into that one. And that's what you see. So it's the baton trading why this trade works. Now, it isn't a trade for like holding for days or weeks or months, but it's a trade to hold sometimes for a few minutes, sometimes for a few hours. And if you did AVAV last night, one of your biggest losers of the day, you'd be up 3 points right now, bouncing 1%. What was the other one we did yesterday? I'd have to go in the room. I did 2 of them. I did AVAV and it worked out, and there was another one. And it's on the retail dollars. You can't do it on some little piece of crap. It's got to be like stocks that are very widely focused in the retail community. So
yeah, I can't remember what it was, but then I always try and encourage you to short the highest flyers.
That too, but again, it works better because the core strategies here, for retail isn't shorting the rip. It's even though today's sell the rip day, it's buy the dip. So you've got to stick around. We're really moving around here. I don't know if he said something else, but we're bouncing around.
No, we just went unchanged. You know, come on. We went unch. You got to look at unch today. 29.50. That's also that 68.30 area is a huge level as far as a quarterly number goes. But we are running overtime here. I just want to tell you that Ratings the Ratings is brought to you by The Fly, your source for over 1,000 breaking news articles daily, delivered in real time with custom filters and alerts. Discover their new The Fly Pro platform with AI-powered company analysis, unique KPI charts for deeper insights. Scan the QR code or click the link in the description to learn more. Thank you to The Fly.
I just want to put up this comment here for a second. Oh no, you guys are flying around here, but it was a great comment.
Let's see.
Here it is. Thank you, John Boston. Trump said he loves pre-market prep. That would be good. That would be good. I think we're spreading false rumors.
Can we tip our subs in the chat? Can we do a reverse tip?
That was a good one. I like that comment.
Yeah, John Boston.
So the conversation will continue over on the Stock Trader Network room. If you want to join us, go to stocktradernetwork.com. Sign up for a free trial. We do all kinds of trades over there. So if you want to come over,
one more thing I want to add. Besides adding more intraday programming, we are working very hard to do that. We are eventually going to be working up from 8 to 5 programming. But a new addition to the team, Michael Feehan, has been helping us out here in Brett's absence. And, it's if you can't watch the show like on time, you're on the move, you're on the train in New York City to run a hedge fund, you can get the Pre-Market Pulse. And that's a new addition. That's a new newsletter that comes out in the morning, takes a look at the action overnight, kind of gives you a little bit of preview of what we're talking about. In addition to that, you get a wrap of the Pre-Market Prep Show, all the highlights, maybe some guest comments, excellent guests today. On top of that, you get an end of the day wrap, just looking at the markets and preparing you for the next trading day. So great information coming out. Join today, Stock Trader Network, while you still